Alan, I suppose we've had all day to look at the numbers and drill into them. Let's first get your view on the latest number we've seen, 12.9% year on year for April.
Well, I think it would have been very difficult not to get a reading that was higher than in March. In fact, prices would have needed to decline month on month in order to produce something similar to the 12.1% we saw last month. So I think it's fair to say that most people were expecting inflation to rise. How much is an open question. I think we got the inflation report much earlier than expected this month. For example, it's only been 20 days since last month's report. So I don't think there was enough time for the market to develop a proper consensus.
When we're looking at the outlook for inflation further down the line, because that, of course, would inform a CBN policy going forward, very much the CBN saying they're looking at inflation peaking at 14 to 15%, and that's in Q3 this year. Do your views meet consensus views right now?
Yeah, I think the CBN's view reflects the consensus and indeed our own view. Which is that we think inflation will peak between 14 and 14.5%, and we see that happening in August, which is in line with the seasonal pattern that you normally see in Nigeria. So I don't think there's anything contentious about the CBN's view, and at the same time, I think the central bank has been very clear in saying that they front-loaded policy, and therefore we and the market probably do not expect rates to move up from here.
So really at a situation right now where we're sitting at a hold and we're waiting for the next cut, when are we looking at that cut coming through? Because of course there are concerns about the vulnerability of Nigeria to the global slowdown if we do have a situation where we have a crisis, a deepening crisis in Europe planning out.
Yes, indeed. Well, the main transmission channel, as everyone knows, for Nigeria is the oil price, and the central bank will keep its eye on that. I think it's still very premature to be talking about a cut. We certainly see rates remaining at 12%, at least until the end of this year, and very possibly into 2013. Before the central bank makes a cut, I think they'll want to see a number of things, one of which is continued currency stability, another of which is more convincing evidence that, fiscal policy has really turned the corner. So until we see those two things, I would be very surprised to see the central bank even discuss the possibility of lowering rates, even though the finance ministry, among other people, has said that they would like to see lower rates.
In terms of the risks right now, just looking at the budget and the impact that the delays that we've had in President Goodluck Jonathan's reforms are having overall on the economy and that fiscal discipline which is needed. What are your views on the delays that we've had, the privatization delays in the terms of the power sector, the oil reforms sitting in Parliament still? How is that impacting the plans from President Goodluck Jonathan's government?
Yeah, well, I think the outlook on the reform agenda is kind of mixed. The report card is also kind of mixed. On one hand, as you said, I think there's been small steps in terms of the power sector. We do have a new tariff schedule, which is, which is incredibly important. And those hikes have yet to come into effect, but when they do, that will make a big difference for investors. On the other hand, the petroleum industry bill continues to be sort of the problem child. I think we're with most people in expecting that it's not going to be passed anytime soon. There's been a lot of discussion about the urgency of getting it passed. Everyone knows that it's holding back investment. Yet at the same time, it's still knocking around Parliament, and we don't see how it's going to get out of there. There's far too many interested parties at the moment, and each one wants a different thing.
You mentioned, of course, the currency is one of the factors that the central bank keeps a very close eye on right now. There has been a sense that it has started to weaken slightly. Are you looking at a currency that could weaken sharply from here? I mean, just looking at emerging market currencies today, like our own here in South Africa, what, 8 Rand 27, 8 Rand 28 is what we're looking at. So how vulnerable is the naira right now?
Well, I think the outlook for the naira depends on two things. One, which is something that most people are looking at, is the oil price. And I think it's very clear that if the oil price falls significantly, say it's below $100 a barrel, then at that point Nigeria may be in trouble. The other side of the equation, which not too many people are looking at, is what's going on in the financial account. And I think from that perspective, it's very important for Nigeria to keep positive and attractive real interest rates in order to convince local savers to keep their money in Nigeria, and at the same time to convince foreign investors that this is a good investment to be making and you should be investing in our local bond market, in our local stock market, and so on. So I think those are the two sides of the coin. From our view, I don't think that the currency is about to weaken dramatically, but again, that's predicated on the oil price remaining close to where it is now, and it's predicated on interest rates remaining at a fairly high level.
Of course, that is very true in terms of demand for local paper. As you say, the real interest rate environment is very important right now. And the Medial Sanusi always highlights that. We've had some sovereign debt auctions so far. What type of appetite have we seen from foreigners for local paper?
Our understanding is that the majority of foreign interest is at the short end of the curve, so they're investing in T-bills where the rates are slightly more attractive than they are in federal government of Nigeria bonds. So I think most of the foreign interest remains at the short end. Eventually, I think interest could pick up at the long end, but again, it will need to wait for a few things, namely you want to see a peak in inflation, you want to see more evidence of fiscal consolidation taking place, and you want to know that at some point the central bank will be willing to cut rates, and that's just not what the market is thinking right now. So until that happens, I think the short end of the curve is where people want to be.
Well, we'll leave it at that for today. Alan Cameron, economist from FCMB, thanks for your time.